I'm Jim Jubeck, and welcome to this week's Trend of the Week video. This week's Trend of the Week is Houston, we have a trend problem. Okay, the problem with trends in the market is the data is always old. That's the standard problem, even when the data is good. So you got lags. So we'll get inflation numbers for March on April 28th. We'll get jobs numbers for March on April 7th. We'll get we'll get GDP numbers for the first quarter around April 27th. So looking backward, you know where we've been. The problem is we need to know where we're going. And it's not just that we need to know where we're going, we need to know how fast we are either accelerating or decelerating, because that's the key right now. It's not so much the trend, it's the momentum of the trend. So what people are saying right now and I don't think there's any doubt of this, inflation is coming down. The real question is how fast inflation is coming down. And that's what we don't know. That we know there are lags. We know that the Fed has done all these things which should be pushing it down. What we don't know is how effective those actions by the Fed, plus things like a slowing economy, which we should see after the first quarter, the banking crisis, et cetera. We don't know how much that's taking out of economic growth. We don't know how much that's affecting inflation. It looks like core inflation is somewhere around 4.5 to 5 right now, looking backward. We need to get down to 2 for the Fed to completely relax. How close we need to get to 2 is probably a political decision on the Fed's part. But for investors, what you really know is how long it will take to get from 4.5 down to 2. Will the Fed need to do more than currently thought? The consensus on April 4 was that the Fed will raise one more time in May, another 25 basis points at its May 1 or 2 or 3 meeting, very early May. And then after that, probably go on a pause. Now, no one knows anything about whether this is true. The consensus is only like about 56% positive for 25 versus doing nothing. So as far as the market's concerned, May is kind of a crux. Whether that continues, however, I think depends on what the Fed's ability to see momentum in all of these factors. And that's very hard to pick up right now, which is why the Fed is saying, hey, it's all data dependent. And the problem is the data is not past data, it's forward data, which by definition we don't have yet. This has been Jim Jubeck. Thanks for watching. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we're doing the next one. It's free. Speaking of free, you can go to my free site, which has 3 portfolios that we track and plays for long-term, immediate market and some dividends. And that's JubeckPicks.com. If you want 6 portfolios instead of 3 that include really longer-term plays, ETFs, and options, which I think are particularly appropriate for this market, you can go to my paid site. That's JubeckAM.com. And you see links to those down below. Thanks very much for watching.